So tell us, what emerging technologies do you see having the greatest potential to transform the investment landscape in the next 5 to 10 years?
Tell me, what is the most used buzzword these days in technology? Here you are. Everyone from a junior school student to the presidents of the countries, they are involved in that discussion, AI and all that. So that is technology buzzwords. But in reality, one has to be very mindful of the undercurrents of those technologies which are going to hit you if you don't understand what is coming up in the next cycle of technology. And if you don't address it right now or equip yourself or enable yourself as what's going to happen, I can tell you, AI is one thing. Of course, AI has been there for ages. It is just the word that people have adapted, whereas people have forgotten the opposite of it, which is natural stupidity. So, so as opposed to artificial intelligence. But yeah, these technologies are real and they are coming up fast. And it depends on how you actually capitalize, how you monetize on that. For example, a few years from now, the entire back-end plumbing would probably be built on metaverse, for example. As Donald rightly said, that the consumer need ease of transaction and economy in the transaction. That's it. And we have seen not in the ages, in the last few years that happening, that businesses are being gamified in such a simple way. Uber, Airbnb, Amazon, e-commerce, lending platforms now emerging locally. Those are global, but locally there are solutions. M-Pesa has evolved into a fantastic game changer at that time because they captured that moment, that technology at the right time and hit the consumers' dopamine requirement, so to say. So that is going to happen to every business. So emerging technologies is a jungle out there, I tell you. But my take is that build your business models, simplify them, and then translate that and use technology as an enabler. Don't really expect technology to solve your problems of thinking also.
In the last part of it talks about the intent, and the intent here is to improve decision-making and portfolio management. There's an author called Kentaro Toyama. I often refer to his quote that technology amplifies human intent. And so when we look at this and seeing that our intent is to use AI and machine learning to improve investment decision-making, and then also to help us with portfolio management, it helps us to really orient ourselves around the good use of AI for us, the way Nasir has sort of really contextualized. So that's number one. And specifically when it comes to improving decision-making, I think the first opportunity is to understand our customers and to understand our clients better. I don't know how many of you have either TikTok or have children who are on TikTok, or if you have used any sort of social media platform, there is what the algorithm shows you, right? And the thing is, behind that, there's a large language model that is continually learning about each and every person, and each and every interaction that is happening on that platform goes to train that model so that when it spits out a recommendation for a video or a recommendation for a friend request or a recommendation for something else. It is based on that machine learning, right? So the question here is, actually the opportunity is for us in the private sector to look at how we are using customer data to train our models so that we can really provide helpful, useful information to enable them to make the next best action that is useful, that brings them constructive value, and actually helps them to grow. Our Chief of Business Development and Strategy, Mutiga, mentioned that Safaricom is about financial inclusion. It's about transforming people's lives. And we have the honor of using these technologies, including AI and machine learning, to orient it towards transformation and actual constructive value.
The technology is there. The blockchain is good technology. We talk about cryptocurrencies, which is part of your question. The technology is good. No, there's no question about it. The currency, the cryptocurrency that is coming with that, to me, I think we have to look at it from, first of all, the point of view of the technology itself and how it's applied. So that technology comes with efficiency. It comes with transparency. It is traceable. The issue of cryptocurrencies, the way it affects the strategies of investments and so on, it will depend on how we are ready to adapt it. From the regulatory point of view, it depends on how people embrace it and learn to live with it, because it's here to stay. So it's another asset class which can bring value if we do it the right way. I've had a lot of jargon today about investments and what to expect for the future. But for us, as regulators, we must adapt to it. As investors and strategies for investment, we learn how to adapt, of course, ourselves, our strategies, but not looking at, for example, the cryptocurrencies, the way we look at them, they are not an end in itself. It's a currency at the end of the day. But what we use it for and how we adapt to what it can do, but in the world of efficiency and how do I put it? In adaptability.
So that's precisely what I'm going to talk about. Today is related to big data and analytics. Today it is going to be, just to give a perspective as to what is this industry all about. Big data and analytics today is a $25 billion industry worldwide, and it's growing so fast, it's predicted that it'll be at least an $80 billion industry by around 2030. So that means there's a lot of things going around big data and analytics. So how does it impact investment? Moment you talk about investment, you cannot have investment without a regulator, because that is never heard of. And if you have a regulator, if you have investments, you need to have risk management. If you have to have a regulator, risk management, then you have to have compliance. So I'll talk about all these things in a perspective. I think you need to give me extra time for that. Yeah. So just talk about, from a perspective of investment management, there is huge amount of potential as far as big data is concerned. Primarily, precisely the same example what Donald mentioned, if you are able to seamlessly go through tons and tons of data, it can be unstructured data, it can be structured data, semi-structured data. Today, whatever comes out of Twitter or whatever comes out of the social media, there's huge amount of data, huge amount of learnings where you can learn from. Any organization or any financial institutions can benefit out of it. Just to give a simple example, we talk about data being the new oil. Like, today data is the new oil in the digital space, primarily because oil was the driving force of the industrial revolution. Today, for the digital revolution, you need data. So the problem with data and oil is that data as such, or oil as such, is not very much useful. you need to do the refining of the data. Same is with the data as well. So you need to do the refining of data. That's what all big data analytics is all about. You need to refine data, tons and tons of data, and then extract meaningful insights out of this and make it useful. And how do you make it useful for the entire community? So that's where the whole thing all about. If you talk about investments, industry per se, take a simple example. If I have data insights on the demographics, on the market segmentation, on various asset classes, what is successful, not successful, I think we can have all sorts of conducive environment for launching new products, which can be accepted very well by the markets. That is one area. I can also do my marketing communications very well if I have meaningful data with me as to when do I release this communication, what should be the pattern, whom should it be addressed to. So that is one part of it as far as marketing is concerned. In terms of risk management, if you look at data analytics, you have various types of data analytics in terms of, you have what is known as predictive analytics, where you can predict, for example, in the case of investments, you can predict losses with a reasonable amount of accuracy. I mean, that itself is a very big advantage for us in terms of investments. So predictive analytics is going to play a very important role as far as investment management is concerned. So that also deals with the risk management, because with risk management, you are talking about losses, you are talking about, estimating the losses and things like that. So big data analytics goes in a big way because it uses statistics and a lot of modeling techniques to ensure that, how do you do proper risk management. It also has got a lot of, talking about exchange space, because everybody here represents various exchanges and clearing corporations. Exchanges and clearing corporations, by virtue of the business, they have tons and tons of data. And it is up to the exchanges to ensure that you utilize this data to come up with meaningful listing. You have various problems. Which exchange and which clearing corporation does not have problems? Everybody has got problems. Problems of liquidity, problems of very, very many other things. So it is important that we analyze this data. A simple example is in terms of what has been happening is you analyze historical data, but by the time you analyze this historical data, it's too late to react. So what happens in big data analytics is you have real-time data or near real-time data where you can analyze and ensure that you come up with a lot of insightful things which can be useful for the markets. So especially in the area of surveillance for exchanges, it's extremely critical. And to ensure that you have there's no systemic failure in the markets. So big data analytics plays a very big role in this area as well. So surveillance is one area where you can embed big data analytics solutions into this thing. Then so that encompasses the entire area. In fact, you can talk lots about wherever this can be applicable. But I think these are some of the flavors as to where it can be applied.
I think in very simple terms, capital markets exist to connect capital to enterprise. So when we speak about the technology coming in, let's look at the context. Let's look at the continental context. 44 million SMEs, for example, according to data, 1.3 billion population. We are looking at $3 trillion economy consolidated in Africa. And we are looking at 94 value chains in terms of economic activity. So the question is, to what extent are capital markets actually impacting on those figures? To what extent are we looking at how many companies are being able to raise capital on our capital markets against the actual economic activity that is taking place in Africa? So one of the reasons why there is that exclusion is because of risk. I think stock exchanges exist to de-risk, to manage risk. Now, technology then comes in to address that and unlock the potential and the opportunity. Because I started talking about SMEs, because there has been drought of listings across Africa, across exchanges. But we have 44 million. Maybe let's discount 40 million. Let's just talk about 4 million. Split that across all the African countries and say that's where our listings should come from. Surely, we should be able to see phenomenal growth. But to be able to do that, you definitely need technology. The technology then gives you the opportunities to bring in financial inclusion, not as a social responsibility, but as a valid economic activity that has an impact on economies. So that financial inclusion then leads to, then requires efficiencies, because what is happening in our economies is that those who are financially excluded, they have no time to go through all the loops and hoops that stock exchanges provide. So why don't we adopt technologies as stock exchanges so that we are able to respond to their needs where they need an answer today, and you use technology, big data, algorithms, AI, to actually determine the behavior of these SMEs, their capability and their potential in a transparent, secure, and technology-driven way. Then you just harvest that, and then we become even more relevant as the capital markets. So that would lead to expansion of our markets. That would increase the product scope, just relying or capitalizing on technology. Obviously, it comes with risks. Cyber security risk has to be dealt with. The issue of now introducing algorithm trading, which might actually bring in artificial volatility that does not represent the actual what is happening on the ground. But there are many ways to mitigate that. This is why capital markets exist. We exist to bring down the risk. So therefore, we invest in cyber security, protection measures. We invest in balancing technology between technology and human judgment. Rely on professional judgment, but with a target to say, why can't we harvest 3-4 million of the 44 million SMEs into the capital markets? But how are they going to be funded? This is where I also brought in the issue of the 1.3 billion population, where we know that Africa has the youngest population. They are going to retire. They need social security. They are not formally employed. Now, bring in technology to actually convert that population into savers. And once they come in as savers, even saving $1 a day, and you consolidate that, you now have a capital base that is resilient. You are no longer, relying on one or two big investors who, when they call each other in terms of their sentiments, your market is gone. You are actually spreading the base of your capital markets, because it is speaking to your local value chains, it is speaking to your local savers, it is speaking to your local enterprise, and it will be more resilient.